Hello and very good morning, everyone. So, welcome you back again, once again, back to my channel, and we'll be discussing a lot out here. I'll just have 10 minutes to spend make this video. So, the video is going to be short and very quick, deal with exact points that we need to know. Firstly, whenever you need to understand the trend, always go on a bigger time frame and just look at where the market is moving. Okay, in case you're not able to make it out, you can just draw the pictures and it'll give you a brief idea how it's going from a low to a high, then a higher low, then a higher high, then a higher low, a higher high, a higher low, a higher high, higher low, and then a higher high. Okay, this give you a broader, more or less picture that yes, the market is bullish in nature. If we come down to a daily chart, what's happening on a daily chart? As we discussed in the very last video, that the market is creating liquidity. How the liquidity is created? There are no zones of support. There is no zone. There is no point of support or point of resistance. There are zones of support and resistance. Now, understanding this part is not that simple. It comes with practice. Why? How are you able to make these points exactly on these levels? Now, I'm not putting these points to form at any particular level or from any particular point. It's based on clear pictures or the practice that I have. So what do we see out here? It's called a sideways trend or a flat trend or market moving in a sideways direction, or in liquidity concept it's known as creation of liquidity. What happens out here that dumb money or retailers are made to think that the price is creating a support at these levels and is basically going to bounce back to this particular level. So what do retailers do in that very case? They put buy options out here, buy options, buy options, sell, 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 sell. Okay. Now, I'll just remove the drawings. In this very case, what am I assuming that the market is going to do? In this very case, before halving is tomorrow, if I'm correct on that. You're not going to see anything tomorrow. Maybe a small price hike or a price push down, a leg down may be seen tomorrow because of those retailers who are going to buy and without understanding the market, and we call it as dumb money. They're going to buy, they're going to push the prices up maybe to a particular level, and then eventually it's going to fall back. What happens after that? After that, the liquidity which is sitting right here, right here, right here will be exhausted first. If you remember in the very last video what I stated, if the market is supposed to go up, first it's going to absorb the liquidity of the downside, then it's going to absorb the liquidity of the upside. How? People who are putting a buy out here will get exhausted, or their stop losses are going to run out at this very area. The market is going to come down to maybe 50,000 and then eventually bounce back. So people out here are going to think that they have to sell. The retail money or the dumb money is going to think that they have to sell at these particular levels. Eventually the market is going to run maybe as high as 75,000 or 80 or 85,000 before taking a scroll back again in this picture and then bouncing off. So this is something that I'm expecting in the market to happen from 19th of April and should be followed for entire May entering into June. This is something that the market is going to do. It's going to absorb a lot of liquidity. In case you are a newbie in this picture, I would request you, urge you, that don't invest in the futures market. If you really want to invest in the futures market, first make money from the spot market. And how do you do that? So what do you do? Instead of putting a buy or a sell, what do you do? You buy maybe Bitcoin's worth $10 below these levels at areas of maybe let me put it down at 57,000 or 55,000 or 50,000. Assume it's going to come as low as following the FVG 51,000. You buy the Bitcoin, okay, and then you decide to sell it off where? You decide to sell it off right close to 75,000. You've made a decent profit or maybe a small chunk of profit depending upon the amount that you have invested. Now, once the market trades back in, then you buy again, and then again you hold until unless the market moves up. By practicing this, you are somewhere or the other prepared for the futures market. But instantly taking down $100 or a $200 and going into this ball game will be really difficult, because the first and the foremost thing that you need to have a control on is going to be your greed and fear. I still get DMs about people making losses in their trades. Their portfolio is getting exhausted because they placed some trades and they forgot about it. So my best suggestion to you at this point of time is going to be that wait for the market to absorb the liquidity of one side, and after that enter into the market. In case you're finding it difficult, let's go for a small coin. We can go for RAD, USDT. Okay, what do we see out here? 1.7. Okay, this is something that I'm going to supposed to teach you people in a span of some time, in a span of maybe a few weeks. You see the liquidity zone out here. You assume that the liquidity zone is out here, okay? So what do you do in this very case? In case you feel like buying, that's absolutely fine. This is a great coin. You buy it close to 1.2, 1.4, okay? And then what do you do? In case Bitcoin comes down, this coin is going to definitely, it's going to knock everything down. So it may not come to 1.2 exactly, but yes, it may come as low as maybe running the current price is 1.70, or it may come down to 1.471 or so. So we buy it out there. And what do we do after that? We wait for the high side liquidity to be taken. And once the high side liquidity is taken, we wait for the market to push up and then eventually make money in this market. So instead of putting and burning money in the futures market, what we do is we simply put money in the spot market, make some money out of it, and then exit out of the market. So in the very next video, I'll get in touch with you all about how to trade the spot market and what are the things that we need to look fundamentally before entering into the technical analysis of certain things, or rather than that, entering into the futures market or the options market and making money out of it. So that's it. Thank you everyone. Thanks for joining.